What's going on, everybody, and welcome back to Exploring Investments with Justin. And I'm pretty excited to do this video today because I'm going to be showing you why it's so important that you start investing today, or at least in the near future, while you're still young. So for those of you watching that are in your 20s or 30s, you still have so much time ahead of you for your money to work for you. And so what I'll be showing you in today's video is a spreadsheet that I created, which actually maps out what your on paper gains will be in the next 5 years, 10 years, 15, and 20 years, showing you how much money you invested and then how much your portfolio is worth, which means how much of that you've gained in profits. So I'm pretty excited to show that to you guys, and I will link it in the description. So if you want to go ahead and download it and play around with it and maybe test out your own numbers, you can do that. And as always, be sure to leave any feedback in the comment section and let me know what your goals are for your investment journey. And if you feel like you get some value from this video, be sure to hit the like and subscribe button because it does help the new YouTube channel. So with that being said, let's go ahead and look at the spreadsheet where I'll show you what the difference in potential returns are if you invest $200 a month for the next 20 years, or if you invest $400 per month for the next 20 years, and show you how much that difference is just from $200 a month, because we are talking about exponential growth here when it comes to investing. So this will definitely be a good chance for you to see firsthand what that growth looks like depending on how much money you're investing. So looking at the spreadsheet that I've created, we have every month over 20-year period outlined in this spreadsheet. And so what we're looking at is my personal goal spreadsheet. And then as you can see on the bottom, I've got the $200 per month and $400 per month spreadsheets as well, just to kind of show what the potential returns are depending on how much you invest. Now, I won't dive too far in depth, but I will tell you that there will be a link in the description to this spreadsheet so you can use it and kind of adjust your contributions however you want. And here you've got the start of month total and end of month total. And basically those are just the total contributions. So that's like my weekly or monthly deposits that I automatically do. And then at the end of the year, quote unquote, that's when I add the 12% average return. And you can adjust this to show like 15%, and then it'll show you. You can see at the bottom here at the end of year 20, I've got 1.2 million if I average 15% return every year for 20 years. But if I drop that to 12%, we'll see that drops down to just about 900,000. So go ahead and play around with this. But one of the things I wanted to look at was, if you do just $200 per month, right? At the end of 20 years, that'll translate to $240,000 that you have in the stock market, and that's just $50 a week for 20 years. So, any amount that you can put in really matters. I know, if you look at the first few years, it doesn't really, add up a lot, but as you get to years 15, 16, and so on, it really starts to add up and make a difference. So you can see your total amount contributed would be 48,000, but you would have made 192,000 on that 48. Now, if we double that to $400 a month, which is just $100 a week, we'll see that now your end of year 20 total is $434,000 on only $96,000 invested. So the more you can put into your account and the more it can grow over time, the bigger your portfolio will be. And if we look at the comparison for my personal goals versus $200 a month and $400 a month, we'll see there's a pretty substantial difference between just $50 every week for 20 years versus adding more and more to your account as time goes on. And, maybe you're making more money from your job so you can put more into the market. That's kind of what I'm going for with my personal goal, is starting out small. And then, by year 20, I'm putting in 4 or 5 times as much as I am now, just because as I make more money, I can invest more. So that's kind of the route I'm taking, is not just doing $400 a month for 20 years, but, increasing that dollar amount that I'm investing each and every month. And you can see here from the graph, the exponential growth that you see over a long period of time. And, that's really the power of investing, is being able to put money in now and look at it in 20 years and see just how much it's grown, because it doesn't grow at the same rate every year, so to speak. So it's not like, at the end of year one, it's 1,000. Then at the end of year two, it's 2,000, and then 3,000 and 4,000. It'll grow exponentially every year. And that's really, the power of what they say compounding interest is. Your money really does start to grow at an incredible rate, especially once you get a lot of money invested in the market. It's a lot easier to go from $100,000 to $1 million than it is from zero to $100,000, and that's because the more money you have in the market, the more money you'll be making from the growth. So that's really what I wanted to cover in this spreadsheet, was just to show you what the potential returns are really. If you don't have a lot of money to invest, then start out with $10 a week or $25 a week. And, if you are fortunate enough to have a well-paying job, then start off with $200 a month or $400 a month and slowly increase that. If we look at me right now, I'm doing $400. Well, I was doing $400 a month last year. Now I'm doing $500. And as you can see, I'm slowly increasing every year how much I'm putting in. And, that's really, my goal, like I said, is to get that exponential growth and really have that money work for me over the next 20 to 30 years. So again, this will be linked in the description, and I'll have some instructions on it on how to use it. So it should be pretty straightforward for you guys if you end up wanting to use it. And just again, the comparison, you can see for yourself here that there's a big difference between adding more each month than just putting in the same amount. But either way, you're still getting exponential growth. So I hope you guys got some value from looking at this spreadsheet and seeing just how much of a difference there is between investing $200 every month versus $400 every month, and then looking at how those two routes compared to my personal goals, where every year I'm increasing how much money I'm adding to my portfolio and how much money I'm investing to try and get that growth even more exponential, to say. So I hope you guys really enjoyed this video, and as always, be sure to hit the like and subscribe button, and I will leave that spreadsheet in the description below. So go ahead and check that out, play with your own numbers, and let me know what your guys' goals are for your investment journeys. And with that being said, I do want to say thank you for watching, and I will catch you guys on the next one.